Hey, what's up, Mortgage Coach members? Dave Savage. I am doing a follow-up interview with Dan Keller. I had him on this morning's Tuesday interview. What's up, Dan?
What's up, buddy? Good to see you again.
Good to see you. Thanks for making so much time today for the community.
Yep.
We just did a full hour, and it was all positioned around what are the three things that Dan did to take his production from, was it 50 million to 70 million to 84 million?
Yep, correct.
And we got to something, one of those habits that he has, one of those cornerstones to success that we wanted to talk about for another 20 minutes. And that was his, you could call it his borrower experience. He called it his mortgage planning meeting. You call it whatever you want. Timber, he would call it his perfect borrower conversation. Mm-hmm. But we really came down to how important it is that if you've got that incredible borrower conversation that gets optimum value, optimum conversion, all the magic happens. So we're going to do 20 minutes on it right now. So Dan, before you pull up your screen, I know we had a lot of people already text me, email me saying, I want Dan's slide deck.
Yep.
And we're going to give it to you guys. There'll be a link down below in a minute. But describe what you're going to walk us through right now and then show your screen and walk us through it.
Yeah, I mean, we talked a little about it today, and it's the sales process and how important it is to not wing it. Right. So one of the big things that moved my business from 50 to 70 and then from 70 to 85, 84 was really honing in on the sales process and understanding that it is a process, Dave. And part of that, the big part of that process is what your clients get when you first connect and what they receive throughout the mortgage process. And a big part of that for me is that mortgage planning meeting. It's a non-negotiable. I meet face-to-face with every client, or if that's not available, we will do I use Blue Jeans, same thing as Zoom, Skype, same type of thing, where I'll use a mortgage coach, TCA, and this mortgage planning guy that you're about to see.
Okay, so here's what we got, guys. We have a TCA because that's part of how he presents the numbers and the interactive platform he uses to show them the numbers. But let's start with your slides, and if you can share your screen. Now, I think my takeaway listening to you talk about these slides is you're not necessarily like going through them in a linear fashion. No. You're not necessarily showing every slide to every client, but this is, these are some visuals that help you tell your story. So how many total slides do we have here?
Yeah, I think there's 19, Dave. And so one of the things there's 22. One of the things that my executive assistant does, she mails this out before they come into our in-office meeting. So actually physically mails it in a packet. So most of the time they've had a chance to see the entire packet. So then I ask them that at the beginning, and then we can hone in on 3 or 4 unique slides, and that'll add the most amount of value.
Well, let's do this. I'm going to time it, and let's do like 5 minutes where you walk through the slides and you show, like maybe there's a third of these that you talk about almost every time.
Yep.
And then let's go to the TCA, and then we'll do 5 minutes to wrap up. So go.
Edit. Okay, let's do this. So one of the first things that I do whenever I meet with a new client, after we've triangled for trust, we've sat down. I say 2 things off the bat. One.
Wait, Dan, you said this earlier, and I wanted to interrupt you. What do you mean triangle for trust? What does that mean?
Triangle for trust. Yeah. So as we're coming into the office and we're giving them their drinks and we're sitting down, I most of the time know how they were referred. So triangle for trust is, hey, so Christian introduced us. How do you know Christian? And what I'm trying to do is I'm really trying to secure the borrower, the realtor, and then the third part is me for this triangle. So how do you know Christian? What did Christian say about us? What are you expecting out of this meeting? That's really kind of how I start off.
I got it. Got it.
So one of the first things that I talk about is after we've triangled for trust and we've had that conversation, as you guys were driving here tonight, what are a couple of things that you really wanted to get out of tonight's meeting? And I just shut up and I listen. A lot of the times it's, we wanted to learn more about rate lock, or we wanted to learn more about rates, or we wanted to learn more about, is it a good time to buy or bubble? They're going to share with me what they really want out. I learned that as a public speaker too, when you're coaching or you're talking to a group of people. So I asked that. The other thing I ask is, why do you want to buy a home? What's motivating you right now to purchase a home? And so I'm really getting a better idea of how to tailor my presentation. So I learned this a long time ago. If I gave the same pitch to everyone or the same speech to everyone, it's not going to be relevant to some. So this allows me to then skip forward to some slides. It allows me to start at a different part of the presentation. So that's where I start, Dave. What do you want most out of this? Why do you want to purchase a home?
And then when you pull up the slides, like how do you transition to these, and which one, what are the ones that you kind of like always talk about?
Okay, so great question. This is what you see right now is up on the board. It's up on the big screen TV when we're sitting down in the conference room getting ready to meet. All right. And I asked them have you had a chance to look at this? We mailed this out to you. Have you had a chance to look at this mortgage planning guide?
So you've sent this to them, and you always start it with, have you had a chance to look at this?
Yep. And then I transition into it like this. Listen, I've been into a lot of meetings with my attorney, with my financial planner, with other business people, where they've invited me to a meeting and I've been uncertain in regards to what I can expect and how long it's going to take. So to eliminate any kind of awkwardness, I want to go over what you guys can expect today here in the next 45 minutes. And then, and so that there's a time frame attached to it. And hey, I'm here as long as you guys need, but I need about 45 minutes of your attention to give you some information, to ask you some questions and give you some solid feedback. Okay. So what you can expect from today's meeting, 3 things. 1, we're going to go over budgeting. We're going to go over your pre-approval. And the most important, we're going to go over what to expect next. Fair? And they're like, oh, great. And you can oftentimes kind of see them kind of take a deep breath and relax and kind of lean back in their chairs and just kind of relax at that point. So the next thing that I do is I talk about really, I go right.
And you're on this front slide. So you're doing a lot of talking. Like this front slide is up a lot.
Correct.
Like this is where you start. And everybody make note that Dan is he's creating a different narrative. He's not saying I'm a loan officer. It's not about rates. It's not about programs. It's like you read that and we're here to get planning. The word planning, guidance, advice. You can just tell that this guy is not your typical loan officer. So just wanted to connect that to everybody.
So one of the first things that I always talk about, and I've already asked them at this point, hey, have you had a chance to look through this? Most of the time they say yes. And so then I say, so you've had a chance to kind of, see some of my reviews. You've had a chance to read my bio and to kind of see what we're all about. And a lot of the times they'll chime in and say, hey, yes, we read about your wife, or we read about, this or that, or we really liked what you had to say about, your guarantee. So we get past that. The first thing that I always go to, Dave, is this slide right here. Why it's so hard to get a home loan. And what I do is I explain that, hey, listen, in 2007, 2008, the housing market collapsed. The economy collapsed. Most of the time, my clients, Dave, are millennials. They're, in their late 20s, maybe 30s, and they're in high school or college during that time. So I have a chance to talk about that and say, hey, coming out of that, we're in a very healthy economy right now, very healthy housing market, but it's important for you to know you're going to see a lot of information online. You're going to see that you can get a mortgage on an app online, that you can buy real estate using an online real estate broker. Here's the thing. It's tougher than ever to buy a home. It's tougher than ever to attain a mortgage because after the market collapsed, the Obama administration put in a lot of regulations that needed to be there and over-regulated the industry all the way up to 2015, 2016. And every single one of those regulations, you guys, are still in place. So although it may appear, you may hear this from other people, that it's easy to get a mortgage, you can do it online, it's very difficult. So I'm going to take a very difficult process and make it super simple for you. So sometimes we get into this, Dave, but I always bring up this slide, why it's so hard. Here's the why behind it, and it's super simple for them to navigate through. Okay?
Okay, cool. So we got about 3 more minutes where I want to spend it on slides. Any other, and remember folks, there is a link to all of these slides down below. Are there any other slides that you just always talk about?
And I then go to this slide, and it's really important, you guys, before we move forward, I want you to understand that I make 3 promises and I take these very seriously. 1, I'm going to communicate with you every single Tuesday and Friday. Fannie Mae released a study in 2017 where 68% of all loan applications either failed in financing or caused delays through financing. And they narrowed it down to 3 big factors: communication, bait and switch, and missed closing dates. And so I've put guarantees in my business to basically combat against those stats. So I'm going to over communicate with you. I have a guarantee of my figures. If there is any difference from figures that we present to you up front to the figures you get at closing, I personally pay the difference. And then lastly, we have a $6,000 on-time closing guarantee. If we miss a closing date, we guarantee up to $6,000 against your earnest money or per diem charges. So I think it's really important to understand that I make these promises and I stick with them. As you can see from our online reviews and our testimonies, we don't have any problem making true on these promises. So I kind of start there.
So real quick, so I hear that a lot. Now you have a slide for it. I know I've interviewed Jeremy Forcier. He doesn't have a slide deck, but he always covers that promise. You know, that's a big part of it.
Yep.
What are some other slides that you just always hit?
Yep. So then I go into this one right now, and this is a really big one. I ask each and every one of my clients if they're familiar with the benefits, the financial benefits of owning a home. And a lot of the times they'll shrug their shoulders and they'll say, well, listen, and I'll say, well, listen, what I want to do is I want to make sure that you understand them, because it's very important that you understand what homeownership looks like compared to renting. The IRS still has mortgage interest and property tax deductions where you get refunds from the IRS every single year. So there's a benefit, of a cash benefit of owning a home. Number 2, it's a forced savings account. Every single month when you make your payment, you are going to paying down your mortgage, your principal balance. And then number 3, which I don't want you to bank on, but here in Washington State over the last 50 years, we've seen a minimum of about 7% appreciation. So I use in this particular illustration, 3%. Even with 3% appreciation, you're still making money on that property. What I wanted to do, because one of the top questions, and I say exactly this, Dave, what I wanted to do for you today, one of the top questions I'm getting here in the Seattle market, because the market is so hot, are we headed toward a bubble, and is now a good time to buy? And so, and a lot of the times, you know, they're saying, oh yeah, this is really important. I put together this slide, and this is where you can really establish yourself as a financial expert, someone who's teaching financial literacy to your clients. So I use a $500,000 purchase with FHA as an example. And I say with your down payment plus your average closing cost estimate, you're looking at $26,500 from a down payment and closing cost standpoint to purchase a $500,000 home with FHA. Now, let's assume that the market goes sideways here in Seattle for 5 years, and we only appreciate at 4%. With a 4% appreciation over 5 years, that's 20% appreciation total. That's $100,000. 20%, $500,000. That's $100,000 over 5 years. You then, so your home value is now worth $600,000. You've paid down your mortgage by about $50,000. So instead of owing what is that, let's just say $485, you now owe $450. So you take the difference there plus your equity, you now have $150,000 in equity in your home, plus over 5 years you received $36,000 in IRS refunds. That's a delta of $186,000 over 5 years. That's a 277% return on investment of your down payment and closing costs. And that's in a sideways bad market that we haven't seen here in Seattle in a long time, and we don't expect to see it. So that's worst case scenario. So when people ask me, is now a good time to buy? I just show them these numbers and you answer that question for me. So do you understand that? And I oftentimes, the couples will look at each other and say, holy cow, we never realized this. Or where else could you get that kind of return?
Yeah, so remember folks, he's building value, strategically, consistently building value. Now let's get to where you would, make the transition to total cost analysis and drive that conversation. If there's anything else you want to cover while we're doing the summary, but we got about, 8 more minutes to keep this under 20 minutes.
This is it right here. And so this is the final slide. I then go to this piece of paper I have printed off in every single packet. I pull this out. It's also up on the big screen. And so what I ask each and every one of my clients at this point is to say, hey, listen, we've had a couple of good phone conversations. I want to recap your budget, and I want to pull up your mortgage coach total cost analysis here in a minute, but I want to go over your budget for your monthly payment to make sure we're in a line there, your budget for your down payment and your closing costs. And I wanted to go over a couple of other things with you real quick. So remember when we sat down, I said, we're going to talk about 3 things today: budgeting, pre-approval, and what to expect next. They nod their head. I said, okay, so here we go. With budgeting, we talk monthly payment, down payment. And then even though I know the answer to this, I ask them, I want them to answer this, and I want them to say it. So are you, John and Sarah, are you debt-free? And most of them say no. And that's where I'm able to jump in now. And what I do is I open up the packet. I have my 6 steps to financial freedom packet and say, hey, listen, we're not going to go over this right now, but every single month I host a Budget with Dan class where I help all of my existing clients and future clients better manage their budgeting, better manage their finances. It's free of charge. Budgetwithdan.com. You can register for the next one. And I'd look forward to seeing you out. But this is where we help you and be able to answer that question. Are you debt free? We're able to help you answer that yes by budgeting and teaching you how to budget. So I have them say that, and then I ask them, do they have life insurance? If they have a family, it's relevant. Sometimes it's not relevant. It's kind of a game time decision whether or not I ask that. And then I go over, do you have an insurance agent? Do you have a financial planner? And do you have a real estate agent if I don't already know? And we answer those questions. That's the budgeting part of it. When I go to the pre-approval part of it, I'm not going to spend a whole lot of time here if it checks out good. If it checks out perfect, I say, hey, you got an A on your credit. There's really 4 factors to an approval. It's it's credit, cash, it's income, and it's property. And I put a check next to each one of those if they're solid. And then this is where I pull up the total cost analysis. So this is where budgeting and your approval collide. And so for this particular gentleman, I met with him last night. Okay, he had already talked to another lender. The lender had only given him, and this was the lender that his realtor recommended to him. The lender had only given him a 20% down option. I have a question on every single one of my client intake forms. And it's simply put, are you a veteran of the U.S. Armed Forces? It's at the end of the questionnaire. And you'd be amazed how many people, just like John, came in wanting a conventional loan and then understanding that he could use his VA benefits to purchase and it could actually save him some money. So what I did is I pulled this up and I said, okay, you're buying at $489,950, John. You're putting $125,000 down. Conventional financing is definitely an option, and it's a great option. But with your VA benefits, you're able to use a VA home loan. It's going to save you $60 a month. But over 5 years, it's going to save you about $1,300. Over 15 years, you see where I'm going with this? So I walked them through that. It was an eye-opener for him. He was like, well, I never thought of it that way. And so now he has options.
Yeah. And guys, here's the deal. It's personally branded advice. He can put it in different formats. You can add a video to it. You can play, you ended up showing how much interest you pay over 15 years. You could show, how much net worth you'd have. You could adjust that number and look at it in different ways. So, it's clear. I mean, it's clear why you have such a high conversion rate. You've got just a very structured presentation. Now, if you're watching this and there's a slide that Dan didn't cover that's your favorite or you want to know more about, let us know in comments down below. Dan and I we only could fit in 20 minutes, and I want to be respectful of Dan's time because he's got another meeting coming up in 3 minutes. And we wanted to get you something coming out of today's call. So there'll be a link down below to Dan's slides, a link. Could you forward me this total cost analysis, Dan?
Absolutely. Yep.
And then if you want us to do like a longer, where literally Dan walks you through every slide, or, there's something you have a question on, put it down below, because I know I can get more time with Dan on this in the future. Hey, brother, you crushed it on today's, 1 hour interview. We're calling it Dan Kellers 3 Habits of Success. So epic call today. Really appreciate the gold in these slides and the value. Any last words of wisdom for the community before we wrap it?
Yeah, I mean, you guys look at that loan amount. I mean, it was, what is that? Let's just say a $380,000 loan amount. Look at what you get paid commissions. Um, that this report and this meeting is really all it took for this guy to say, "Hey, I'm going to go with Dan and his team." So, I mean, although it's $60 a month savings, it wasn't a flashy report. It wasn't rocket science, but my ability to stack those side by side, to go over this with him, to share with him a mortgage planning meeting like this, it's just another deal. It's another client now that I get to serve for the next 20 years.
Yeah, client for life. Because if you listen to the call, Dan's also doing annual reviews. So, it's like every borrower gets the same amazing, borrower consultation. Every borrower gets an annual review. Every borrower gets a total cost analysis. Everybody is getting the Dan Keller level of education and advice. So if you got value, give this a like, share it with your mortgage friends. And if there are slides that you want more explanation on, or you'd like Dan and I just to do a more detailed walkthrough, let us know in comments below. Take care. Dan Keller, really appreciate you, brother.
I appreciate you. Thanks, guys.
All right, take care.